Hey everyone, what's up? Welcome to another session of our education classes, and I hope you're assimilating the previous classes and understanding understanding them gradually without any pressuring yourself, and giving yourself the time your trading career needs to develop, and without rushing in order to make mad money real quick. In this class, we're going to talk about how to frame low risk trade setup. I'm going to talk about how to frame low risk trade setup, right? How you can take a trade with a very small risk in combination with all the teachings and analysis you've been learning for the previous weeks and days behind. So we're gonna combine all that to these, and you see how you see what it can give you. So what makes a setup worth it? Like what makes you want to take a setup, or what make a setup valid for you, right? Number one, selecting trades on higher time frame. Like your setup should be on the higher time frame. You look at your setup most of the times on the higher time frame. What do you mean? If you see your setup on the higher time frame, is very good for you as a beginner trader, because uh, once you break that setup into a lower time frame, you see how precise and accurate you become, right? The second, large institution and banks do analysis of the daily, weekly, and monthly charts. So you see, those institutions that don't trade most of the times on the 1 hour, 5 minute. No, you will not see them those small hour time frames, because the reason being why, because they are out for big move. They go for major lumps or major shorts, right? So you will not see them on a 15-minute doing probably 5 pip moves on somewhere. So locating price level that aligns with institutional order flow. Locating price level that aligns with institutional order flow. You saw the setup on how I told you how you can be taking your trades off of Fibonacci, and you see when you rhyme all that with this higher time frame, right? You go to the higher time frame, and now once you go to the higher time frame, if you see maybe a retracement to a discount area of your Fibonacci on the higher time frame, now when you break it out to the lower time frame, you see how it respects and bounce off of that area, right? So locating price level that aligns with institutional flow. So that's what you want to respect. You want to locate such area that aligns with maybe your Fibonacci, other blocks, mitigation, borrow, breaker blocks. It should align and match with one of those, you see, so that it gives you a lot of confirmation towards your trade setup and makes you feel more comfortable. Probably you wouldn't get this comfortable at your first try or at the second try, or you won't have confidence in your setup. But as more often as you keep doing it consistently, you're gonna see how you will develop self confidence upon your trades, and it's gonna help you in the nearest future, right? Next is higher time frame setup forms slowly and gives us time to plan accordingly. Wow, that's what I was trying to say. Higher time frame, if you go on higher time frame, you see a setup, what you can do is once you see that setup on a higher time frame, it's on a higher time frame, let's say on a daily. If if it's on a daily, it's going to be reacting slowly, right? Now if you break it down for the 1 hour and on the 15 minute, you see that will give you opportunity either to buy or sell on a 15-minute time frame, and you can get some good numbers of people doing that. So like I said, they said the higher time frame setup form slowly. So as it's forming slowly, it gives you the opportunity to plan accordingly. Either you are going to take this trade or you're not going to take this trade based off of your analysis in um, risks to reward as well. So how do we lower risks? Higher time frame. You see, most of the thing has to do with higher time frame. So higher time frame is key also. In the charts. If you want to start your chart, make sure you go to the higher time frame before breaking it down to the 4 hours, 1 hour, 30 minute, 15 minute, 5 minute, 1 minute charts. Higher time frame have more influence in price, so we focus there. That's what I'm talking about. The next trades we take on higher time frame can equally be found on lower time frame, right? So it doesn't mean because we see those set up on higher time frame, we'll not take them as well on the smaller time frame. Everything that happens on a weekly, daily, monthly also happen on a 1 minute, 5 minute, 15 minute. Now it's only going to take a longer period of time on a higher time frame. The longer the time, the longer the period of the objective to attain. The shorter the time, the shorter the setup will reach its objective peak if only you know what you're doing. That's what this means by trade we take on higher time frame can equally be found on lower time frame. So it's not because you can find your setup on a higher time frame means you won't find those same setup on lower time frame. You will absolutely find them on a lower time frame, but just that they'll be reacting as quick the lower time frame than maybe on a daily. Like let's say for example on a daily, you see a setup, you take that setup, then it takes three to we took it on Monday now. The setup attain its objective on Friday. You see it took 5 days. That's on a daily. Now if you go on a 4 hours, you see setup on a 4 hour, it takes 24 hours or it takes 2 days. Now if you go on a 1 minute, a setup there can take 24 hours. If you go on a 15 minute, a setup there can take now 12 hours a day or something like that. So you see the shorter period there. That's how it works. And as a result, by doing the above, your stop loss will be small as well as your risks. Now let's dive into those charts. Let's dive into those charts a little bit. Yeah. This is gold. I think I'm already in gold, so we'll just continue then. Right. You see gold. This is gold on a higher time frame, right? This is our present situation on gold on a higher time frame, right? You see, the higher time frame, like I said, this here was a run on stop losses by this week. Here, as I told you on the previous classes, right? And this run on stop loss, as I explained, it doesn't mean it's only the daily time frame we're going to see this. Even on the 15-minute, you will see it if you pay attention to the chart. But it's just going to happen more quicker than on the daily, as I explained. This was showing us that that gold was about to drop, you see. But as a result, you see it made a swing here. I told you what the swing was. You see 1, 2, 3 made a swing and continued above. What was the objective? The liquidity here, right? The liquidity that was found here. That was where the market was trying to reach at in order to take these people out before dropping out like it did drop last week's. So as you see this setup now, you see this takeout in this liquidity run out here, right? Based off of teachings we've had in the previous classes and the rest. So if now you see this area that I've done this box, if you break this on the 4 hour, yeah, everything is still there, but now we're on the 4 hour, like I said. Let's go back to Arnold and read something. Large institutional banks trade locating price level at that aligns with institutional flow. Yeah. You see this, like I said, this is what happened. This is the previous low on the 4 hour time frame. And now you see on the 4 hour instead you see a bullish candle before the bearish candle. And now this bullish candle before the bearish candle becomes what? An order block. If you go on a daily, you see instead a weak rejection off of this area. You see instead a weak rejection off of this area, right? Now, as on a daily, or if we were trading on a daily, we see this as what? A rush into what? Stop run, right? But now, when we go on its lower time frame, we need to see that it aligns with institutional order flow, which is irrespecting the 4 hour bearish order block, and you see the price never reached this area again because it already ran out the previous highs, the previous buy stocks over here, and it's ready to drop below. It's ready to drop below, right? As a result, you see the market dropping, coming back up on this bearish order block now. What will you be as you've seen on the daily time frame, you did week and close on the daily here. What you want to do is you go as you come to the 4 hour time frame, you see what happened here. Now, as they were saying, daily time frame forms slower and it gives you opportunity on a lower time frame. A daily time frame did the week, and a lower time frame was seeing a bearish order block, telling us that what this market is about to go down. Why is it about to go down? Their liquidity is taken out here, and there's no liquidity to the upside, so he has to focus. He has to change his gear. He has to change his gears. So you see the market dropping, you're expecting this bullish candle before the bearish move, which is the order block. You see, you respect it. You see, you put your, this is it. You see how it respects it, right? It comes here, it respecting all these candles, respecting it, and it drops, drops, it drops. This was our recent swing over here. I think it would take a Fibonacci and put it there and give us an optimum trade entry. And yeah, it never reached our optimum trade entry, but I think it reached its premium, and premium never to drop down, but it was good for a sell because we were looking for sales opportunity now, not buying opportunities, right? So should the market retrace, expecting the bearish order block and drop, you see from there it dropped, and it dropped, and this was another swing, right? If you miss this swing, you wait for this optimum trade entry, and this is it. You get back here. The market is from the swing here, and we still have the swing here. With the previous downside low being the objective, so you have a swing here. It took a second, took a second, and it drops. Previous were taken out. Now we have another new swing form here. Now when you see this other new swing that is formed here, you see how our optimum trade entry over here. Now downside high being an objective. Now what do we see here? Here is what do we see here? A swing on the 4-hour time frame telling us that what this market is about to change direction. Now you as a trader, as an upcoming trader trying to trade like the institution, now you change your Fibonacci's, looking out for buying opportunities, expecting the swing here. You see how the market stays at the optimum trade entry here. You see it went back up, come back, respect this bearish order block, went back up. You see now we have explosive move with the upside target. Let's say you see it here, right? See it, right? Upside level attained. Liquidity here taken out. Retrace a little bit previous liquidity here taken out. Retrace a little bit liquidity here and here. I think taking out all those liquidity now we're taking out here. And this is where we have the market right now. Right. This is where we have the market right now. So all these you see how they work in correlations together. And without doing this, you see this area, right? Mark this area. Let me put a box in this area. You see, and I'll explain you something that was said on the notes above. Higher time frame have more influence in price, so we focus on trade with takes on higher time frame can also be found on lower time frame as well. Yeah, by doing all the above, your stop loss will be small. So with the high time frame setup forms slowly to give us time to plan accordingly. Yeah, that is what I wanted to focus on. We are on a 4 hour. It forms a little bit slowly, more than a little bit slowly, but faster than the daily. So if we break this to the 1 hour on our box zone, I just want to make sure I see something out here. Oh, this is accurate. That statement is true. You see here, you see the bands of optimum trade entry on 1 hour here at this area. At this area, we'll have a bounce at this area. Right. So the markets go up, which is bounce off this order block. It doesn't go below that, right? When you see the market respecting this and going back up, it's telling you what the market is about to go. It went back up, it retraced a little bit to respect these other blocks and the previous support zone, right? You see it's bouncing up there. Come back here, it don't pass this previous order block here. It does not pass this previous order block here. This is the previous order block here. It does not go below that. It stays around this area. And as it's staying around this area, it's giving you the opportunity, like people that know what it's doing, it's giving you the opportunity to take a buy at this area. I immediately look for a buy here. Well, on the 1 hour, if you go down to the 15 minute, right? Let's go back to the 4 hour. Let me explain something again there. Let's say you were on the 4 hour time frame here. As you say, by doing all the as I said, by doing all the above, stop loss will be small as well as risks. Imagine you were here, you wanted to take this trade, right? You saw this run of stop losses. You wanted to take this trade because you saw this swing, right? You took this, and you put here. And put here, right? With your upside objective being that one, right? This is your risk to reward, this area. Now, what did you do? You have a stop loss of, I think, a stop loss of 46 pip. You have a stop loss of 46 pip, right? Now, watch this. We have a stop loss here of let's say 40 pip stop loss here, right? If you go, let me remove this. If you go now to the lower one, the lower time frame, let's say 1 hour, right? See that you saw this order block. Since you are looking for bullishness, you see that the market came back up and respected this order block. You see that instead of you having a 20 pip stop loss, a 40 pip stop loss at the previous one, now what you would do is you have this tighter stop loss than the 40 stop loss you had before, because you know it's about to go bullish and it's not going to go. It's going to respect the bullish order block because it's about to go bullish. So it's not going to break the bearish order block. So you see now, instead of you using a 40 pip stop loss, I think you'll be using a stop loss more tighter than that. Right? This is 22 pip stop loss, right? Instead of 40 pip stop loss, now you are using a tighter stop loss and reducing your risk to reward, right? You see how accurate it is. Now let's go to the 15 minute. Let's reduce this again. Let's go to the 15-minute time frame. See, mark those area where those line is at, everything is at. It's not gonna scare you. You're not gonna get lost or something. Yeah. Watch this now. We are on the 15-minute time frame, right? You see the last bullish candle before the bearish move. Oh, for the bearish move and the bullish movement. That is your order block. In fact, this is your order block here, right? On the 15 minute, this is your order block. Now you see the way the candles were bouncing off this. I placed this line off of the 4 hour time frame, right? And now see how it's respecting this line, bouncing off this line, bouncing off the line. As you see, it's bouncing. What is this? It's showing that this support level is valid, so it's good for a buy. So it keeps on bouncing, bouncing, bouncing. Now, when you see this bouncing, what do? You take your thing. You want to take your trade now here with the tighter stop loss. I think this is a stop loss that is not even up to 10 feet, and the risk to reward of the upside objective being that thing here. Now check this stop loss here. From here to here. From here to here. Crazy, right? 10 pip stop loss. He used a 10 pip stop loss for 200 pips objective. Crazy, right? Now you see how accurate this can be. I'm not telling you how to look at this, what I'm doing, go into all the charts, do what I'm telling you and I'm asking you to do. You see how everything I'm saying to you is very, very accurate. Everything I wrote on the note is very accurate. Trades we take on high time frame can equally be found on low time frame. I showed you how they can be found on lower time frame already. High time frame have more interest on price, so we focus there, which was where we started. Selecting trade setup on higher time frame was selected as well on higher time frame. Large time frame and banks do the analysis. We did our analysis on the 4 hour, which is almost like a daily. Locating price level that aligns with institutional, we locate and we respect the other blocks. Higher time frame setup from slowly giving us time to plan accordingly and enter our trade setup with a little risks. And finally, by doing all the above, stop loss will be small and risks will be as well. Thank you for listening and see you on the next class, ladies and gentlemen.